down 74% in 2022. Is Lyft stock a buy for 2023? I'm going to answer that question in this video, so stay tuned. First thing I'm going to look at is revenue growth for Lyft, and the ride-sharing company, of course, was devastated during the pandemic when people did not want to leave their homes as often, especially get into cars with another individual. And you could see revenue collapse from just over a billion in a quarter down to less than 500 million in a quarter. But before that, you could see Lyft was on a very nice growth trajectory, and now since economy started reopening, it's recovering its lost revenue, and just recently it surpassed its previous peak of 1.05 billion in quarterly revenue. So the company is growing, and growth is not what I'm concerned about with Lyft. What I'm concerned about is how is it going to make money, right? I was always concerned with this business model because with each ride that it serves, Lyft has to pay the driver considerable amounts of money, and so how is it gonna profit from that? It's not like if it serves more riders in a day, it can make more money, right? That's not the case because if Lyft gets more customers, then it has to pay the driver more money. It's not like the driver is a full-time employee of Lyft earning a certain amount of money per hour, and then if the driver gets more rides, then the additional ride revenue goes to Lyft. That's not how the business model works. The way Lyft works is that the driver only makes money when they provide rides to customers. And so with each customer that gets a ride, the driver earns a percentage of that revenue, and that percentage is so high that it makes it difficult for Lyft to generate profits on the bottom line. I don't know how much it's going to need to expand its revenue. I don't know how often of the rides that it serves needs to be shared rides and in what facility and all of that. When will it actually turn a profit? That's my concern for Lyft. It's not the revenue. I think the revenue is going to be there. I think it charges customers such a low price that they're willing to use the service. It's just a matter when they do eventually raise the price to a level where they can earn profits. That's when I'm concerned what customers are going to do. If it raises prices to a level where it can earn profits, what will customers do? So let's look at operating income, and you could see losses, continuous losses. It lost 290 million in its most recent quarter. It was losing a lot more than that previously, and so it's consistently negative on the bottom line. And this is a concern of mine with the company. Are they going to continue operating at these losses? Because this is not sustainable. And then what's going to happen with ridership if or when they increase prices to a point where they can generate profits, right? You might be willing to take a Lyft ride for, if you're paying $10 or $15 right now, but what if they started charging you 25 or $30? Would you still order a Lyft ride? That remains to be seen, and that's a risky proposition for investors to consider buying a stock when they don't know if the company can operate on a sustainable level. They don't know what the company will do if it raises prices enough to generate profits. That's a big question mark for Lyft investors and myself in particular. So let's see if it's losing money on the bottom line, but is it generating positive cash flow from operations? It's not. It's also burning through cash from operations. You see consistent losses. Here's the zero line here. It's only made very minor positive cash flow from operations quarters, while the most of the time it generates at negative quarterly cash flow from operations, which is again another bad sign. And not to just pick on Lyft here, this is the case for Uber as well, and DoorDash, and the other food delivery and driver cars, ride delivery cars. It's a difficult business model to generate profitability in. You would need a concentrated customer segment, which I like that with Lyft is that it focuses primarily on ride sharing. It does not do food delivery. So it's focused on one area, and the fact that it could provide shared rides. Maybe it can get somebody that's got that SUV and can get 3 or 4 customers at a time, operate at that rate all day long, and then maybe it could be profitable. But that's a lot. That's a lot of scale that it needs to reach in order for each driver to be operating at that full capacity all day long. So I'm skeptical of this business model. So now let's look at its valuation. Um, and because it's not profitable consistently and it's not generating cash flow from operations, I chose to use the price to sales ratio, and it's trading at a price to sales of 1.139. The cheapest it's been in its own history going back. We only have a brief history for Lyft. It's a relatively young company. And even though it's the cheapest it's been, I'm still going to say the stock is not a buy for 2023. I want to see more proof of this concept. I want to see the company operate on a more sustainable level before I could recommend this stock as a buy. I want to see them raise prices and see what kind of ridership they get after they raise prices enough to where they can be self-sustaining, right? At least breaking even on cash flow from operations and close to breaking even on the operating income line. At least raise prices to that level, and then I'll reevaluate and consider buying this stock. All right, that's all I've got for this video. Thank you for watching. I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.